Welcome everyone to MEDICI Studio. This is our Weekend Wisdom series where we talk with leading VCs and try to debunk and demystify the venture capital world. My guest today is Tilman Ehrbeck of Flourish Ventures. Tilman, thank you so much for taking the time.
Thank you for having me. It's the weekend. Whether it's wisdom, I let you and your audience judge.
Let us keep that for the audience, and we really appreciate you taking the time. And I want to thank the audience here as well. We have this session being live streamed on YouTube, LinkedIn, and Twitter Periscope. And you might also be watching this recorded on MEDICI Studio. And all of these wonderful pearls of wisdom that we are collecting here in the Weekend Wisdom series, we have opened up this for all the FinTech audience in these special COVID-19 times so that people can benefit and learn as we get through this. So Tilman, let's jump right into it. But before we do that, people are familiar with Omidyar network. Your fund, Flourish Ventures, is relatively new. And of course, you have been in this space for decades. But I would love to ask you to just introduce yourself, your fund, and your overall mission in your own words for the benefit of our audience, please.
Okay, no, happy to do that. So, as you can probably tell from my accent, I grew up in Germany, started my professional life at the International Monetary Fund, so really macro. And very quickly realized that the action was really in the private sector, and in particular with smaller enterprises, entrepreneurs who really wanted to change the world. So after a detour with McKinsey, which brought me to India, by the way, Aditya, I spent 5 years in India between 2005 and 2010. I started working on financial services, in particular financial services for folks who at the time were outside of the system. And that brought me to the Omidyar network, where I built up our financial services team and portfolio. And that was going so relatively well that we decided to spin it out a year ago. We took the portfolio that we had built and the team with us, and we spun out under this new brand name of Flourish, keeping two key features in place in conversations with our source of capital, which is Pierre Omidyar, the founder of eBay. And these two features are, we have permanent capital, which gives us great degrees of freedom, and we do have a mission or a mandate, if you will. And our mandate is to help households and small businesses improve their lives, their economic lives, and access and the ability to use financial services is a key component of that. So everything we do is through that lens. FinTech, which came up as a theme after we had started, is a means to an end in that context. So our main mandate and mission is backing entrepreneurs who use technology-led innovations to help improve the economic lives and financial lives of their customers.
Now, on that point, people use these terms somewhat interchangeably, and I have myself been guilty of that sometimes, but I have also evolved my own views as to what does it mean when we say financial inclusion, financial health, impact investing. And we chose to focus this conversation on, for your suggestion, FinTech with purpose. Mm-hmm. How do all of these things tie together? Are they all the same thing? Are they different? How would you explain this to the audience?
No, they are related and they build on each other, if you will. So the starting point, and many of your audience in emerging markets will understand this particularly well. The starting point really was, for me, at least 10, 12 years ago, was the realization that literally half of the world, half of working age adults globally, were outside of the formal financial system whatsoever. No bank account, no insurance coverage, no nothing. And that didn't mean that they didn't use financial services. It meant that they used the informal, the age-old informal services. the money lender, the pawnbroker, the informal remittances services, the rotating savings club. And they used them because they had no alternatives. But these services can be very, very expensive and very inconvenient. So there's a double unfairness in all of that, right? If you don't have what we all have in this audience, I submit, right? We have a relatively stable income. Our cash flows are neatly aligned. We have insurance coverage for the unforeseen circumstances. When you're outside of all of that, you need these services more. You don't have them. The informal alternatives are more expensive. So it is expensive to be poor. You have heard that expression before. And that's how it started, with access and inclusion. But that's only an input. Ultimately, we want people to have better lives. So we realized we needed an outcome orientation in addition to the input, or the input orientation. And that's how financial health came about. And that's particularly relevant in highly advanced economies like the US, where we are operating. So we operate, I should have said that earlier. We operate in the US and in a large number of emerging markets, the big countries, India, Indonesia, Bangladesh, in Asia, Nigeria, Kenya, in Africa, Brazil, Mexico. So in emerging markets, access and inclusion was the starting point. In the US, that problem has been solved. The issue in the US is that many, many households essentially live paycheck to paycheck. And that is a middle America phenomenon as well. By some metrics, this could be up to 2/3 of America live paycheck to paycheck. And that is because they are not as well served by the incumbent financial services industry as they could and as they should. And that's where the opportunity lies. And so the orientation, the mandate in the US is much more financial health outcome oriented. And then impact investing as this third concept that you mentioned. Again, for us, that's a means to an end. When we make investments, we want our individual investments to help improve their customers' lives. If they don't, then what's the point, right? So we start with that high-level impact lens, but then we want and we need our portfolio investments to be widely successful in their own right. Our entrepreneurs, our co-investors expect that from us. But we also want them to demonstrate that this new approach is feasible. And in the ideal end state, actually change the entire industry narrative. And I can give you examples around that. But let me stop here. Does that make sense? Inclusion, health, impact investing as a means to an end?
I think that's a good way to frame it. So thank you for doing that, because it's about the objective and the means, right? And it depends how you look at it. I want to ask about something that, you know, I'm hoping there is a happy answer here, but I don't want to assume. If we go back in time and look at, say, public markets, right, maybe a couple of decades back, and the wave around double bottom line investments or double bottom line portfolios, or, you know, we started seeing funds that said we won't invest in tobacco and alcohol, as an example, right? So that is kind of to stop the negative. But there were also funds which, or there were also movements in the public markets which said, okay, there is an ESG movement, right? So the public markets have a different narrative around this, which seems to have evolved. In the private markets where you play and most of us play, it is what we just talked about. My question is the following, Tilman. Are you seeing the work that you do become more mainstream, so to speak, over time? Because if you look at you know, the work that you do, which is focused on fintech with purpose, versus the work that, say, another traditional fintech investor would do, is that gap narrowing in your mind as you look at the last couple of decades?
Yeah, I think so. In parallel to the public markets, right? The public markets, depending on how you count, at least 25% is now ESG oriented. And if you read Larry Fink's shareholder letter, right, from BlackRock, right, he would argue any and all of their investments ought to be impact oriented. there has been a convergence in our space as well. So when we started, we had this mandate that I described earlier, and we said tech-led innovation is a means to that end, and it's actually, frankly, the only means to that end, because the traditional cash brick and mortar models are simply too expensive to reach folks who transact very frequently, but at teeny tiny ticket sizes. And so we started from first principles, and because of that mandate that we have. But increasingly, other investors realize that at the base of the pyramid, if you will, if it's half of humanity, there's a huge untapped opportunity. And so these worlds have been converging. and I would say in the current environment now, with a pandemic crisis and an economic crisis that has been triggered by the reaction, the lockdowns that we had to go through, this notion of you need to really do right by your customers and help them in very difficult circumstances is even more important than it used to be before. So yes, I do see a convergence. And I give you an example. So if you look at our investment themes of the last couple of years, one is in challenger banks, right? It really bugged us that in the US, the traditional banks slap you with hidden fees and charges. You have an overdraft charge and you pay $35 or something like that because you didn't pay attention. From a technology perspective, this shouldn't even happen. The bank knows when I use my debit card whether I have that balance or not. And so we said, you know what, there is a better way to do this. And if a challenger bank that is app-based, that has no branches, no physical infrastructure, it's not hindered by the traditional legacy infrastructure, just can provide better services, faster, cheaper. And that's what they do. So in the US, we have two investments of that type in Chime and Aspiration. They can provide a free transaction account, no hidden fees, because they have such a cost structure advantage. And customers love that. And in the current environment, their customers need them even more so because they have to shop from home. Nobody wants to go to a shop, have to touch that screen and all that type of stuff. So yes, there has been convergence already, and it's even accelerating, I would argue now.
That's great. I mean, that's great to hear, especially from someone like you who lives and breathes this and has been doing this for many decades. That's a great observation and answer. And for people like us, right, who work in the industry without having kind of that impact label proactively, but we have that as an understood inherent back of the mind driver anyways, right? That's a very comforting and encouraging thing to know. And I think you gave us some examples, and it does seem like we have come a long way even in the advanced markets like the US. I mean, I remember from 10 years ago, right, the biggest innovation at the time seemed to be prepaid card-based things, right? Over-the-top innovations on prepaid cards, and it always bothered me that the companies were making so much money on the high interchange of prepaid and the high fees for when there was breakage, that the objective of helping people who are not financially well, how are you exactly helping them when you are hitting them with fees and high interchange? Right. And so it does seem like we have come a long way. If we could double click a little bit on the kind of the stark differences, because we always like to compare and contrast between what is fintech innovation in emerging markets versus fintech innovation in the so-called advanced markets. And I do have my views on quote unquote advanced because it depends how you define advanced. But if we were to keep it simplistic and maybe use some examples from your portfolio, how would you kind of showcase some similarities and differences in your world, in these two parts of the world?
Yeah, I start with maybe the differences that used to exist, and then I will say that They are coming down, not least because the crisis that we are living through right now. But the historical difference, if you will, is a bit the obvious one. So in emerging markets, large chunks of the economy totally outside of the formal economy and outside of the formal financial system. So really an ability to innovate into white space. And in particular, innovate on top of the mobile phone revolution. Initially, the 2G feature phone, but then quickly the smartphone with an open architecture type environment. And frankly, emerging markets, as a result of that, have leapfrogged so-called advanced economies massively over the last decade. China, initially it was East Africa with mobile money, and then it was China with the closed loop systems around Ant Financial, Alipay and WeChat WePay, and more recently it's been really India with the investment in the public good open architecture infrastructure, digital infrastructure.
Right.
Whereas in the West, in the traditionally more advanced economies, we had an incumbency industry structure, we had incumbency regulation. In the US, complicated by the fact that we have at least 5 federal regulators, and many financial services are actually subject to state regulation. And things were sort of easy enough, right? I mean, why improve over the credit card with a magnetic stripe, right? It was convenient enough for me as a consumer, as a middle and higher income consumer. And I don't even bear risk, right? When there was fraud, somebody took care of it, which is why we never quite, or we shifted much later in the US to the chip relative to other geographies. So it used to be quite different. I do think there is now convergence to that. And that has to do with the features of the economy in the new normal that I could imagine, right? So from the online digital platforms will become more important in our lives. Embedded finance will be more and more embedded in this. And so I do think that there will be consumer behaviors that will increasingly be the same globally. Nobody wants to go to a bank or an ATM, right, and punch in their PIN number in the time of COVID. And so now you will see the US introducing QR codes, and you will in the US see more social commerce, right? Facebook, Shopify just announced their innovations there. So I actually think there's a convergence from an industry structure perspective as well. And then the difference might well be what the regulatory environment allows or not allows. Because financial services are for good reason. They are regulated and they should be regulated.
And I think, that is something we see in so many spheres, right? Where, it sounds like a cliche that technology is a big equalizer, but I think we are seeing that in financial services very, very clearly, right? I mean, there is no reason for a rich person or a poor person to have a different expectation of their experience when they're shopping, right? Or when you're taking a shared taxi or an Uber or an Ola, right? You could live in an emerging market and be at the so-called bottom of the pyramid, but your expectation from your mobile app is exactly the same as your expectation from the mobile app, right? If you're a rich person in New York City in Manhattan, right? And so technology has really equalized expectations of experiences that people want, and the ecosystem has to cater to that, right? And I think the technology is an equalizer, but business models are obviously driven by the regulatory constraints that are different and availability of nationwide infrastructures, where again, the so-called emerging markets seem to have better nationwide infrastructure, like real-time payments. So it's fascinating to see this for sure. And I do want to ask you about the future, right? Because I feel like there is so much good that has happened already in the last couple of decades. We are seeing truly people learning from each other, and you have lived in different parts of the world, so you have that firsthand view yourself. As you look at the future and as you look at how these experiences in payments and financial services are getting embedded because of platforms and because of other adjacencies being the front and center, are there any opportunities for entrepreneurs, founders that stand out, saying that if you were to start a company from scratch today, what would be a few things that you would advise them to think about?
Yeah, so I started hinting at the future from an industry perspective already. So let me riff on that a little bit. And then I come back to maybe more fundamental advice to founders. On the industry structure, I was supposed to give a keynote at the Mumbai FinTech Festival in early March, and obviously that got canceled. And I put together a presentation that I quite liked, so I was very bummed that that good work had gone to naught. And then a few weeks ago, I flipped through that again, and then I realized that a lot of the trends I would have been talking about just have been accelerated or amplified by the COVID crisis. And I started mentioning some of those, so let me elaborate. So I do think there's a trend towards digital platforms becoming more important in our lives, all of us, right? Which ones is a bit different, depending on my life circumstances. If I'm a retired grandfather, maybe it's Facebook and WhatsApp, because I want to communicate with my grandchildren and I want to send them a gift when they graduate. If I'm a small business, it might be the social commerce platform. If I'm a gig economy worker, it's a gig economy platform. So for example, we have an investment in the US in a platform that matches opportunities in the gig economy space. It's called Steady. That was already super important before the crisis. Now it's even more important because some of these gigs have fallen by the wayside, like ride sharing, but new gigs are emerging, such as food delivery. So platforms are becoming more important in our lives for all of us, and they are the natural owners of some of financial services. Certainly the payments piece, right, because that's incorporated, but also capital. They could provide working capital for my small business. Or at least they have the data to help underwrite that working capital need. They could provide, or at least they have the data to help underwrite insurance needs. So embedded finance was already a big trend before the crisis, and it will even accelerate more. So against that, right, there are opportunities to provide the plug and play product silos, the point of sale credit that helps the merchant stimulate demand. But the merchant doesn't want to underwrite the credit. That's not their core competency. They need somebody to plug in. The targeted insurance coverage, right? I buy a cell phone, a smartphone. It's really important to me because I'm a gig economy worker and it's part of my optimizing my earnings and my livelihood. I want to insure that smartphone for screen breakage or whatever it might be. And there are specialist players who plug in and do that. And we have investments, we have made investments in all of these spaces. Zest Money in India would be a credit plug-in. Kuala in Indonesia would be an insurance plug-in. Toffee in India is another one. So that's happening. Then you could imagine there's a whole new question in this context, in this new economy that we are talking about, around the remainder of the plumbing, right? Helping new players with a KYC component, with fraud detection. If the world moves online, unfortunately, online fraud will rise probably. So there are FinTech, B2B FinTech opportunities in this open API world that connects new platforms with regulated balance sheets at the back end. Somebody has to connect all that. Huge opportunities there. I think there's a third set in around data, right? So data is obviously, was already and is now becoming more and more important. Who controls and owns that data? How do you make it available in the context of open API banking and banking data portability? There's probably a big role to be played for intermediaries that enjoy my trust as a consumer when it comes to my data. So there's a number of themes and the industry structure level. If,
Right.
as an entrepreneur, I would urge people very much to go back to the fundamentals and first principles and start by saying, is there something, or is what I am doing fundamentally helping somebody improve their underlying situation? Be it as a household or be it as a small business. Do I really create value? And in particular, do I create value by using technology, data access, intelligent interpretation of all this new data? And do I create so much value that either the consumer is willing to pay or some third party is willing to pay, and it's viable for me as a startup? You need to have an understanding of your unit economics, and they need to be fundamentally positive. Otherwise, you don't have a business that can profitably scale and create the type of value that you as an entrepreneur want to create. But it starts by innovating a value proposition that truly makes a difference for people.
Thank you for that, Tilman. Thank you for that. Is that something that you would somehow modulate for what people are now calling the new normal? Is there a new normal, you think? Is COVID-19 a blip that we will just come out of and everything will be fine? Or do you think that the world has changed fundamentally, and so our worlds have also therefore changed fundamentally? Is there in your mind truly a new normal here that we should get ready for?
I think so, and to some degree that goes beyond my competency, so everybody should listen to this with a grain of salt and form their own opinion. But I think it became very quickly clear that this will not be a V-shaped type event. In the real economy, stock markets maybe, because central banks around the world have pumped liquidity into stock markets. The stock markets are not good indicators of what's going on. Our common sense, our observations, what we hear from others is frankly a better indicator. And so what's going on? We have a pandemic crisis. It's unclear how we will get this under control. It will last at least 18 to 24 months. Even if we find, and I obviously hope that we do, find a vaccine relatively quickly to manufacture that vaccine and get it into the arms or wherever it needs to be shot into of 80% of humanity globally, and that's what you need for herd immunity, right? That's 7 billion people. So this is a huge logistics challenge. We are in unprecedented times from a public health perspective. And that's outside of my competency. But from all I've read, it seems it will take 18 to 24 months. I know what that means for the economy. The economy will not, the real economy will not recover in a V-shaped fashion. It will start and it will reopen with starts and fits, because we might have to shut down again when there are second waves. And until and unless we have a vaccine, there will be no return to anything that is pre-normal. And I think that time frame is long enough for a number of things to change. Consumer behaviors will change. I've read somewhere that it takes 60 days to form a new habit. We all have been through 60 days of lockdown, so new habits have been formed. And once people have done something differently and found it to be superior, right? Cheaper, safer, what have you, why returning? This is very pertinent for payment behavior and these type of things. So consumer behaviors will change irreversibly. What constitutes a viable business model will change. Because even if a restaurant opens, if it has to operate at 50% capacity, that's just not viable because their margins were so thin in the first place. So yes, we are already in a new normal. And I very much hope that we pull together and make this new normal, make a virtue out of the vice, if you will, and make this new normal work better for for more people, cheaper, safer, more adequate.
Tilman, on that note, I want to thank you again for sharing your thoughts. We have really an opportunity here, all of us, no matter which part of the ecosystem you are into, take this time to get ready for that new normal, to upskill ourselves with learning and wisdom. And weekend again is the best place and the best time to become a little wiser. So thank you, Tilman, for making us a little wiser. I appreciate it. I want to end this episode by just reminding our audience of the COVID-19 fund that MEDICI has launched. We are encouraging all of you to visit the page, make a donation, take the time to think about how we can help. As privileged as we are here in the ecosystem, there are so many people who don't even have hope. No contribution is too small. If we could take a moment to think about what could we do to help solo and small volunteers on the ground who are doing things in their own way, who do not have the infrastructure support of large organizations, how can we help them to do something for people in need in the COVID-19 crisis? So thank you again, and thank you, Tilman. This is Weekend Wisdom on MEDICI Studio. Thank you.